Welcome back to the channel. A lot to unpack, a lot to talk about this week. This week, we're talking about the most common questions, the top 5 questions that most Canadians are entering into chat, into Google. Ultimately, what are those questions and what better way than to address them than right here on the channel? So stay tuned for that. Once again, welcome back to the channel. If you have not subscribed, we can ask you to subscribe to the channel. Consider subscribing, hitting that notification bell down below. More importantly, like, share the video, but leave your questions and concerns down there. Did we miss a question? Is there a question that you have that maybe you're looking for answers? Let us know in the comment section below. But now let's get right into it. First question, ultimately, I'm going to be looking at the screen here, making sure we get these questions right. The top 5 is, first of all, we'll start with number 1. What happens when my mortgage term is up at renewal? So obviously, this question is geared for existing homeowners' mortgages that are approaching renewal. If you have a mortgage that is approaching renewal, like millions of Canadians right now that are approaching renewal in 2025, 2026, is you're going to be getting a notification either through email, through mail, a phone call, most likely from your lender or broker to start the process to renew the mortgage. At this particular point in time, you have a few different options that you can exercise. Ultimately, you can stay with the existing lender, you can shop around for a better rate, and ultimately look at those options, because depending on your current income, your current structure right now, you may be able to just sign back with your lender. Maybe it may cost you, or you may only be able to save a couple of basis points. So you have to weigh out the options. But generally at renewal, as long as the mortgage is within good standings and you haven't missed a lot of payments and the lenders offer you an opportunity, they haven't given you a letter to not renew, then you can just sign back with the existing lender. You always have a mortgage, but always get a second opinion. So reach out to either us as a mortgage professional or your own. Once again, our information, contact information is in the description box below. Do I need to pay a mortgage broker? The answer is no. The real answer is for 95%, I would say, if not more, client interactions that we deal with, there's no cost to the client. If you're working with a major bank, if you're working with some of our broker-friendly banks, ultimately there's no cost for what we call a business, that bank that you're giving that best rate and product to. Now, there are situations where a broker may charge, not all brokers charge, but they may charge if you're going to a B lender, an equity style lender, where there's a little bit more paperwork, there's a premium attached to it. Now, there is a difference between a broker fee and a lender fee. Some of these banks may offer or charge a lender fee or commitment fee, they may change that wording, to initialize or administrate the mortgage. So you have to be understanding about those particular things. Now, oftentimes with these particular lenders, especially if you're going into the private space where you're going into private mortgages, there can be, and most likely will be, a broker lender fee that is attached. So understanding options when you're working with your A banks, you should not be charged a fee to deal with the bank or the broker. If you're working with the equity in the B space, there could be a possibility. On the C side, most likely guaranteed you're going to see that on that space. What credit score do I need to have to buy a home? Well, beauty with the credit score here in Canada is that you actually need to have a credit score that is above 600 to 620 in Canada. That is literally I think the threshold for the barrier to entry. Now, once again, it's dependent on the bank and the totality of the credit. That score does not mean, hey, I have 600 or 620, I'm guaranteed a mortgage. Maybe your partner, for someone you're buying the house with, if you're buying it with somebody else, they have a higher credit score, so it offsets it. Sometimes what happens if both credit scores are really weak, the bank may ask for a guarantor or a co-signer, depending on the type of mortgage you're getting, to add strength to that deal. So what do you need? You need a good credit score. In order to obtain a good credit score, we'll maybe do a video on that. It's obviously talking about it. We've done videos in the past talking about credit scores, but try not to miss any payments. Try not to go to collections. Do not go through consumer proposal or any type of bankruptcy if you don't need to. If you own a home and you have equity built in, talk to a mortgage professional before looking at all these really bad things that could damage your credit for 7 years or more, because banks look at them the same way. So talk to a mortgage professional. But once again, credit score minimum 6 to 620, and there might be some caveats. You might need a co-signer, guarantor in that situation. Number two, should I choose a fixed or variable mortgage? Honestly, this is the biggest question I get with every single client, whether they're buying, they're renewing, they're restructuring. What do they do? We talked about it at great length. I think it comes down to, and I'm going to repeat myself here, is you really need to consider your appetite to risk. If you're the type of person with a smaller mortgage and a variable rate mortgage up or down, those swings are manageable, and you really think, hey, 50 to 100 bucks, not going to make or break me, then, and you want the flexibility to be able to get out with a 3-month penalty and ultimately lock into a rate if interest rates drop, and you're okay with having that volatility, then a variable rate mortgage may be the best option. If you're thinking about, hey, I want to put my head to bed at night, not worry about where things are going, what's happening with these fixed rates. I'm not the type of person that wants to stay up to date with all this stuff. Once you've gone through the process, you tend to forget about the mortgage journey until you get that renewal, like we talked about earlier. So you have to understand what type of person you are. And more importantly, if you're thinking about fixed and variable, obviously you're thinking about the rate. Variable rate mortgages may be a little bit more expensive now, may come down, may be cheaper than fixed rates that are being offered at the current moment. Talked about rates a little bit last week. But at the end of the day, if you're qualifying for a mortgage, you want the lower rate to qualify if you're planning to push that budget a little bit higher than what the banks may have generally allowed for. So talk to a mortgage professional about that if you're thinking about it. And obviously, we're the type of people, we're straight shooters. We'll tell you, hey, based on your income structure, based on these ratios, maybe going variable is not the best choice for you. One single little misstep, and with a variable rate mortgage, obviously the rates going up or down or whatever the case may be in the next 3 to 5 years, that may put you in a really bad position. So, just take a look at it. Ultimately, at the end of the day, if you want to look at those options, in the description box below, link to our free app. Number one question, how much can I afford to buy? And this literally is the question we get all the time, and that's why you do a pre-approval, or in some cases a pre-qualification. So I think the idea is I can't answer this for everyone, but when you're looking at your income, you're looking at your debt, what can you afford to buy for? Do your math. What is left over at the end of the month after you've paid the tax man, the CRA, your income taxes? Understand your budget, understand what you have first and foremost. If you really want to understand what you can afford, there's two things you can do. One is in the description box below, do a pre-qualifier, go through the tool. Just remember, that's a deposit-driven or an insert-driven calculator. If you make a mistake or you input the wrong information, it's going to obviously spit out the wrong information. Once again, when it comes to income, especially if you're salaried, hey, that's fantastic. If you're salary plus commission and you know how to do a 2-year average, depending on how that income is, if you're looking at hourly, if you're looking at self-employed commission, ultimately, as long as you input the right data, then it will give you a relatively good comparison on what you could potentially qualify for. As opposed to a pre-approval, number one is we as brokers and lenders should be gathering all that information, job letters, pay stubs, T4s. We want the whole kit and caboodle. Why? Because we want to make sure that we don't leave any extra money on the table. We want to make sure that you qualify for everything that you can possibly qualify for, and then you decide what you want to buy for. You decide what you can afford based on what those payments look like, how much house you want, right? At the end of the day, our job is to get you the amount. You play within it, right? It's like the OLG, the Ontario Gaming Association, right? You sort of, Ontario Lottery, know your limits, play within them. We give you the top end, you decide where you fall within that. So ultimately, if you're looking for those tools, any advice, reach out to a mortgage professional, talk to someone who specializes in mortgages. You're going to get generally the best advice out there. And they're going to be very in your corner, because remember, as a broker, we don't get paid by you, the client. In most cases, you get paid by the lender, and that's the lender that you end up selecting, right? We're not generally putting you in a specific lender. We're giving you the multiple options. You're looking at all the pros and the cons. We give our clients, a sheet or an email with all the lenders, all the bells and whistles, the pros and the cons, and they decide what lender they want to work with, and ultimately what is best for them. So If you have a question, if you have a concern, a thought, a comment, we want to hear from you. Leave it in the comment section below. But we'll leave the video here. Wishing everyone a wonderful weekend, and we'll all see you next week.